Hello and welcome to the Diary of Mystic, the Oracle of Omaha, a tale of wisdom and wealth. In the heart of Omaha, Nebraska, a young boy named Warren Buffett began a journey that would redefine the world of investing. From a humble beginning, Buffett developed a passion for business and a keen eye for value. Armed with a paper route and a thirst for knowledge, he embarked on a quest to understand the intricacies of the stock market. As Buffett grew older, his understanding of finance deepened. He studied under the legendary investor Benjamin Graham, whose teachings on value investing would become the cornerstone of his own philosophy. Graham's emphasis on the intrinsic value of a company and the importance of margin of safety would shape Buffett's approach to investing for the rest of his life. With his newfound knowledge, Buffett formed a partnership with Charlie Munger, a fellow investor who would become his lifelong friend and business associate. Together, they acquired BerkshireHathaway, a struggling textile company, in 1965. Under their leadership, Berkshire Hathaway underwent a remarkable transformation, evolving into a conglomerate with a diverse portfolio of businesses, including insurance, manufacturing, and retail. One of Buffett's most notable acquisitions was Geico, a struggling auto insurer, in 1983. Through strategic management and cost-cutting measures, Buffett turned Geico into one of the most profitable insurance companies in the United States. Buffett's investment strategy was rooted in the principles of value investing. He focused on identifying undervalued companies with strong fundamentals and holding on to them for the long term. Buffett believed that the market was often irrational and that it was possible to find mispriced assets. He emphasized the importance of understanding the underlying business, its future prospects, and its ability to generate cash flow. Buffett was known for his circle of competence, which referred to the industries and businesses that he truly understood. He avoided investing in areas that he didn't fully comprehend. Buffett's investment philosophy was built on several key principles. Margin of safety. Buffett insisted on buying stocks at a significant discount to their intrinsic value, creating a margin of safety that protected him from losses. Long-term focus. Buffett was a long-term investor. He wasn't concerned with short-term market fluctuations and was willing to hold on to investments for years, even decades, if he believed in their long-term potential. Focus on quality. Buffett preferred to invest in high-quality businesses with strong competitive advantages and sustainable growth prospects. Simplicity. Buffett avoided complex investment strategies and financial models. He believed that the key to successful investing was to keep things simple. Beyond his investment prowess, Buffett was also a dedicated philanthropist. He pledged to donate the majority of his wealth to charity, supporting causes such as education and healthcare. Warren Buffett's legacy is one of exceptional investment success, ethical business practices, and philanthropic generosity. His wisdom and insights continue to inspire and motivate future generations of investors and entrepreneurs. The Oracle of Omaha story is a testament to the power of patience, discipline, and a long-term focus. Additional insights. The importance of reading. Buffett is a voracious reader and believes that reading is essential for lifelong learning and success. He often recommends books on business, history, and biography. The power of compound interest. Buffett understands the power of compound interest and has emphasized its importance in building wealth over the long term. The role of luck. While Buffett acknowledges the role of luck in his success, he also emphasizes the importance of hard work, discipline, and sound judgment. The importance of ethics. Buffett believes that ethical business practices are essential for long-term success. He has often spoken out against corporate greed and unethical behavior. By studying Warren Buffett's life and career, investors can gain valuable insights into the principles of successful investing and the importance of long-term thinking. His legacy will continue to inspire and motivate future generations of investors and entrepreneurs. Inspiring quotes from Warren Buffett. Risk comes from not knowing what you're doing. Be fearful when others are greedy, and greedy when others are fearful. It's not about how much you earn, it's about how much you keep. Invest in yourself. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Buffett's words continue to inspire and motivate people from all walks of life. His story is a testament to the power of patience, perseverance, and a long-term focus. By following his principles and applying them to your own life, you can achieve your financial goals and make a positive impact on the world.